So by now you're probably fully aware that the market's in disarray. So you've got a decision to make. It's either ash or cash. If you're working with us, we're going to make that decision for you. If you're working on your own, it's going to be a tough decision for you. But market seems to be rolling over. So let's get into the details. My name is Brian Cannon, and welcome to Markets in 5. All right, so I'm going to go through two charts today, and I just want to mention again, we don't do market timing. I have no idea where the market's going to end today or tomorrow, next week, but we use technical analysis and trend following strategies to help guide our decision making on as to how much risk we want to accept in the market. So based on this chart, it's not a lot. We had, during the last Markets in 5 video, if you watched, we had kind of talked about the wind up between the two blue lines, and was it going to break up or was it going to break down? Well, clearly it broke down, and not only did it break down, but it took out that last line of defense. I kind of harped on that red line, came down, touched it, and then blew through it this week. So that's not a good sign. So now we have to assume that the market is going lower. So then the question is, where's it going next? So if we do a quick measured move from the top to the most recent intraday bottom, and then repeat that, I have the market coming down to between 4,000 and 4,100 on the S&P 500. So, we've got a good bit down before I think we find any major support. There could be certainly some minor supports and some days that that'll pop back up. So generally doesn't fall straight down, but it could. I would say that the first kind of line of defense from a standpoint of finding some support would be around this level. If we come down here and find some support and it takes back off, hey, we get back in. But if it drops and blows through that, then we look for the next level of support. So there's a lot of danger in being in the market right now, and you got to be just very careful. But again, market timing without a specific strategy is not advisable. So this next chart I've gone through several times in the past as well, but I think it's very, very timely to go through it again. So obviously with the market rolling over, we want to kind of look at some of our other indicators, and we look at a lot of charts, but this one I think is a good one to really, really kind of pay attention to. So here this is the high yield relative to the S&P 500. So when high yield begins to outperform the S&P 500, that's usually a bad sign, right? So if we look at the pull down of the pandemic in 2020, the bottom chart here is the high yield relative to the S&P 500. So you can see where the high yield broke this downtrend and started to really outperform, coincided with a major drawdown in the market. So when you've got that high yield outperformance and it coincides with a break in trend on the high yield and a break in trend on the S&P 500, that's a very, very good sign. So, what's different about this time versus 2020? 2020 was just a waterfall down. So now we've got certainly just this kind of this slow, gentle, just rollover, this erosion of the S&P and the high yield. So, but this week we've taken out the channel trends on both the high yield and the S&P 500, and now we've got a slight overperformance of high yield relative to S&P 500. Again, not a very good signal. So as you can see, there's a lot of issues in the market, and those are really only two charts. We look at a lot of charts. So it's a decision right now for you. It's either cash or ash, and again, if you don't do technical analysis, I wouldn't encourage trying to do market timing because it doesn't work. If we can be of assistance, or if you have any questions, certainly give me a shout. If you like this video, feel free to share it with friends and family, and make sure to hit the subscribe button. See you on the next Markets in 5.